Good morning and join. In this video, we are going to study the second part of our chapter, that is IFRS, International Financial Reporting Standards. IFRS. See, it is written that these are issued by International Accounting Standard Board and they cover a wide range of international accounting standards. See, you can see the word international. What does this mean? International. That means when we go internationally, that means if a firm wants to do business out of his home country, suppose a firm is of India, if that firm wants to do business in other countries also, then that firm has to follow IFRS, International Financial Reporting Standards. Okay, and these are issued by the International Accounting Standard Board. These standards, just like the accounting standards which we have studied in our previous video, these standards, international accounting standards, are to be followed by the firm if a firm goes international, globally. Okay. Assumptions which the IFRS follows. The first one is going concern assumption. We have already learned about going concern. Going concern means when we assume that our business is going to run for an infinite period, it will never came to an end. The same assumption is here also, that the firm will never going to end its business. It will remain, it will exist for infinite period, infinite number of years. Next is accrual assumption. Accrual, the word, I think you maybe remember about this, that whenever there kind of any transaction happens, any kind of sale, whether it's cash or credit, then at the time of that only we have to record in our accounts. Okay, so same happens here also, that all the transactions are recorded in the accrual basis. Next is we have a measuring unit assumption. Here, see, measuring unit is the purchasing power, current purchasing power. What is our current purchasing power? As I have just, we have just seen in the accounting standards that we have to record all the cost at the historical cost. That means at the price at which we have purchased that asset. Now, IFRS is better version or improved version of that. That means we have to record the value of the asset at the current market price. We have to write the current market price of that asset. Okay, we don't have to write the historical cost of that asset. So it is an improved one. It is completely better than accounting standards. Next is our constant purchasing power assumption. Suppose I think you have learned about the word inflation. When inflation goes up, the purchasing power of our purchasing power decreases. So this assumption says that the value of the capital should be adjusted to the inflation at the end of the financial year. The end. Next is needs for IFRS. Why we need IFRS? Why we require them? So first is easy access to global capital market. When a firm wants to go globally, that means out of his home country, then it is required to follow the IFRS, and it helps them. IFRS helps that firm to go globally. That means uniform norms to be followed by all the firms all over the world. Okay. Next is easy to make comparison. Obviously, when same rules, same norms are followed by each of the firm, who are doing their business globally, so comparison is easy for them. It makes the comparison very easy. Uniformity in financial reporting. See, again, when we are the IFRS actually brings uniformity, same norms, and it will again help in comparison also, comparability, and it will bring transparency also at the same time. So it improves the standard and quality of financial reporting. Financial reporting, the standards and the quality both get improved by using the IFRS. Lower cost of capital raised abroad. See, whenever any company go globally, it may happen that that firm has to maintain two sets of financial statements, one for its home country and one for uh, international purpose. That means one by the accounting standards and one by the IFRS to satisfy them. But if we follow the IFRS, then there is no need to prepare the one set of financial statement, that is by accounting standards. Just the IFRS is sufficient. So only one set is to be prepared. So it will definitely lower the cost. Okay. Next is true and fair valuation of assets. As I have told you that it has overcome the limitation of accounting standards where we used to write all the assets at their historical cost. But in IFRS, we are recording the value of an asset at the current market price. That's why it will definitely represent the true and the fair value of the assets. Last one is that it difficult to commit fraud and manipulate the accounts. See, uh, as we are these the IFRS is quite rigid and tough. So there is a little or almost there will be no possibility for any kind of frauds and manipulation may happen in these accounts. Now the next is the last one, that is benefits of IFRS. See, it is helpful in enterprise operating globally. Whenever firm goes globally, I have told you that initially they were maintaining the records on the accounting standards only. But if a firm goes globally, it helps the firm to maintain the accounts at only following the IFRS only. It will help in consolidation of its financial statements too. So these IFRS are very helpful for those firms. Helpful to investors. See, all these investors who are interested in our accounts wants to have a high quality, relevant, reliable, transparent, and comparable information, which is provided by IFRS. These may help them to take their economic decisions. And IFRS helps them in doing that. Next is helpful to industry. See, uh, from when any firm is operating outside the country, so that has to follow the globally accepted accounting standards. Nowadays, most of the stock exchanges require information as per IFRS, and convergence to IFRS would enable Indian company to access international market easily. Okay, so it happens in this way. Now, lower cost of raising funds abroad. I have already told you that two sets of financial statements a firm may be bound to prepare if a firm goes globally. But by following IFRS, only a single set of financial statement has to be prepared and it will lower the cost of that firm. Next is helpful to accounting professionals. See, accounting professionals will be able to provide better services in countries adopting IFRS. Okay, so last is the true and fair value. See, as we are recording our the value of the asset on the basis of the current market price, that's why it will helpful in presenting the true and the exact or fair value of that asset, and helpful in or it will it will improve the credibility and reliability of our accounts and our firm too. Thank you.